Welcome to the 87th episode of Kanga Crypto News, your weekly briefing for crisp, dependable updates from the crypto world. I'm Kuba, here with the biggest developments from the past week. A quick note before we begin, everything you hear on Kanga Crypto News is researched and prepared by our expert Kanga analysts using reliable sources only, but this is not an investment advice. We release new episodes every Friday. Stay on top of the most important moves in crypto by subscribing and tapping the bell so you never miss an important update. Now, let's dive in. Let's start with a major institutional move. JPMorgan, known for past skepticism about crypto, has launched its first tokenized money market fund on the Ethereum blockchain called My On-Chain Net Yield Fund, or MONEY. The fund is seeded with $100 million of the bank's own capital and will be available to high net worth and institutional investors with a minimum entry of between $1 million and $25 million. The fund accepts investments in US dollars or USDC and offers daily dividend payouts, blending traditional money market characteristics with blockchain efficiency. MONEY will run on JPMorgan's Connexus digital assets platform and represents a significant shift toward digital asset tokenization by major Wall Street players, similarly to how BlackRock and Goldman Sachs have already done. It signals increasing institutional trust in blockchain infrastructure for regulated financial products. As tokenization expands, blockchain settlement could become a core part of institutional treasury strategies. It represents a bridge between traditional finance and blockchain technology, reflecting the increasing adoption of on-chain settlement by regulated institutions. Bitcoin dipped below 86K midweek, sliding about 3.2% over 24 hours, with Ethereum and XRP also weakening. Analysts point to reduced risk appetite as macro markets priced in a less likely Fed rate cut after the December FOMC meeting. According to liquidation data, the sell-off triggered roughly $592 million in forced liquidations across derivatives markets. Price correction shows market sensitivity to macro conditions. December has historically been positive for Bitcoin, but this week's move highlights how quickly sentiment can change with shifting rate expectations. Across the Atlantic, the UK's Financial Conduct Authority has launched a broad consultation on proposed crypto regulations covering asset listings, trading standards, and risk transparency for staking and lending services, with implementation targeted by 2027. Public feedback is accepted until February 12, 2026. UK regulation could align with evolving frameworks in the US and EU, balancing consumer protection with innovation. The move comes alongside the reported drop in UK crypto ownership from 12% to 8%. Gemini has secured a license from the US Commodity Futures Trading Commission to operate prediction markets, a growing segment of financial services where users bet on outcomes from sports results to economic indicators. This follows a 5-year approval process and may broaden Gemini's product offering into derivatives and futures. This expansion reflects regulatory clarity and new growth opportunities for crypto platforms within the regulated derivatives space, offering another institutional access point to blockchain-enabled financial markets. Spot Ripple ETFs continued to see consistent demand, logging nearly 30 consecutive days of net inflows. Since launch, cumulative assets under management across these products reached close to $990 million. During this period, XRP ETF flows outpaced both Bitcoin and Ethereum ETFs, suggesting a period of increased institutional attention towards this specific asset compared to market leaders. Now over to Ripple's broader ecosystem. Beyond ETFs, XRP futures open interest expanded across institutional derivatives venues, while Ripple continued to scale RLUSD stablecoin integrations across layer 2 networks. These developments suggest Ripple is positioning itself not only as a payment company, but as a full financial infrastructure provider. Overall, this was a week of institutional innovation, regulatory shifts, and market price response to macro conditions. Big banks are deepening blockchain integration. Regulators around the world are defining clearer rules, and traders are reacting to both fundamentals and monetary policy expectations. In the short term, we see mixed sentiment. Long term, institutional adoption and tokenization remain strong themes shaping the narrative. That's today's Kanga Crypto News. If you enjoyed the episode, please like, share, and subscribe to stay current with the latest updates. See you.
We are Kanga, beyond crypto.